Guys, it's Doc's Market Minute for Friday, June 12th, and I'm looking at a daily chart of the S&P futures. So these are the E-mini futures contracts. This is the continuous contracts. So we're going through a rollover right now, and actually as of yesterday we just flipped over to the September contract. But regardless, this is a continuous contract, and so this is sort of an effort to knit all these quarterly contracts together. And when I looked at this morning, what jumped out at me was that we're starting to see potentially a head and shoulders pattern here. Now, we've seen head and shoulders patterns show up over the last couple of years, time after time after time, and the usual result of these is the right shoulder gets blown through as the stocks continue to rally higher. But eventually, one of these days, we are going to set up a lower high, and that is going to show that very distinct head and shoulders pattern. Usually happens when nobody's looking for it. Really, the last time we saw a very good representation of this was about 4 years ago, August of 2011. So what I have here is basically what I think the neckline is, and we may be working on the right shoulder. I would like to see a little bit more constructive work to this, a little bit more time. Typically, if you look at the time component of each part of the head and shoulders pattern, usually you find these fairly consistent between the left shoulder, the head pattern, and the right shoulder. Usually you don't see these like really truncated right shoulders. Then you know that something really bad is going on if the right shoulder is so truncated that there's nothing there. But typically there is some linearity to these when they do work out. So I would expect to see a little bit more work on this right shoulder if and when it does collapse. Okay, so that's kind of the element of it. And if we take this white line, and what I did was I took the white line from the highs down to the neckline. And so what I'm going to do is I'm going to extrapolate what the lower target would be, and that's going to come in just a little bit below the 2000 level on the S&P E-minis. And so that means that on the cash index, it would probably be a little bit lower than that. And that turns out to be about a 6.3% haircut. About a 6.3% haircut from the top, which is not our full 10% correction, but might be all that we're going to see. Now, a lot of times what you also get into is this is just the daily time frame. So the daily time frame may set up like this, like a head and shoulders, right? And so that works to the downside. And then what happens is that 6% is realized, and then what it does is it bounces back up, and then the new selling kicks in, because what you find is that this is only the daily chart, and then perhaps a larger weekly pattern is setting up here. So we'll definitely keep an eye on that and understand the context between the different time frames. But again, one red candle does not a downtrend make. All I'm doing is I'm extrapolating through here. I did notice by eye a pattern this morning. It looks like was setting up for potentially head and shoulders pattern. Remember, what I talked about this weekend was lower highs, lower lows, and then I saw this big move come on Wednesday, and I said, okay, prove it to me. Prove it to me that you really do want to go back up to an uptrend by taking out this high. And so far, it's been unable to do so. So the daily chart will continue in a downtrend until we do reverse polarity, which could start with this being a higher low. If this turns into a higher low, and then we have a higher high, which takes out this high, then we have changed polarity back up to the uptrend again. This is what you have to do. You have to kind of walk through mentally all the different possibilities so that you're not surprised. What you don't want to be is, deer in the headlights where, all of a sudden we get this big move and you just didn't know that it was coming, and you've got positions that are on the opposite side of that. And that's where it becomes very frustrating in trading, is if you have an opinion and a bias and all your trades are aligned with your opinion and your bias, and you're not taking time to really look at both ways that the price could move. Actually 3 if you count for sideways. But account for all the different possibilities so that you're not surprised for when the price does finally start to move. And it will move very, very soon. There's just too much energy coiled up in these charts. All right, folks, that is it for today's report. Have a great weekend. We'll see you back here next week.